Hello everyone, welcome to chapter 7 and 8. Now, both of these chapters will be explained together in this single video. So this is going to be a long video, so make sure to not just binge watch it, but also make notes along with it. Some of you may not get the information and the technical knowledge inside this video on their first watch. So if needed, you should watch it multiple times to actually get everything out of it and attain the knowledge hidden inside these chapters. The concepts explained in this particular chapter are my favorite ones, right? These concepts, particularly in chapter 7 and 8, influence my technical knowledge the most, and I use them on a daily basis in all of my higher time frame and lower time frame analysis. Now, I use these concepts to build a higher time frame narrative. I use it to build a lower time frame narrative. And most important of all, I use it to determine my drawn liquidity both on the higher time frame and on the lower time frame, right? Now, the subject of the matter is that you should take them really seriously because it may seem a bit ambiguous at first, but as you dig deeper into the knowledge and get to know it better, you'd find yourself being able to analyze the charts, particularly the higher time frame charts, with a better perspective and a refined view, right? Now, that being said, let's get into the first part of video, chapter 7, which is about weekly profiles. So first of all, as always, I'm going to start off with actually introducing what we are actually dealing with, and I'll make sure to define it in the most refined way possible. That way you'd have a better idea of what we are dealing with throughout the chapter, right? And throughout the video, and you'd be able to understand it better. So basically, the definition is that the weekly profiles are an advanced type of market profiles, right? Now let me tell you what I mean by advanced. So if you watched my previous chapters on market profiles, then you would have noticed that those market profiles were particularly based on price, right? And only the price aspects of charts were discussed. But now with these weekly profiles and intraday profiles, we're going to take those market profiles even further and also discuss the time aspects of the charts with it, right? Which is why I introduce weekly profiles as an advanced type of market profiles, right? Because inside weekly profiles, not only price aspect is included, but including the time aspects too. So basically, in summary, market profile takes price aspect into consideration, whereas weekly profile takes both time and price into consideration, right? This is the exact reason why this concept is my favorite, because they are dynamic, right? And both aspects of the charts are included in it. So, weekly profiles are an advanced form of market profiles used to break down the weekly candles range into manageable segments, right? Each with its own fractals. So, what basically is said in that definition is that with weekly profiles, we're going to divide the weekly range, meaning the weekly candles range, into segments, and each segment will then have its own characteristic or fractal nature. Now, obviously, this fractal nature will be dynamic and will be subjected to change and will be adjustable, meaning there's going to be no black and white around it, right? When we are dealing with weekly profiles, and you're going to have to look at the combination of key levels, PDRA metrics, and dealing ranges to reach a conclusion. Now, as I said before, all of these concepts that I'm explaining in CPI work only when incorporated and integrated correctly with each other in a logical framework. The same way weekly profiles will work only if you integrate it properly, and it won't work alone, right? It will only work if you integrate it correctly with key levels, market profiles, and other concepts like PDRA metrics and so on, right? Now let's move on to the next slide and let's discuss the importance and the significance of weekly profiles and what are the different things that it can help us with, right? So here's a list of the things that weekly profiles will assist us with. The first one we've got on the list, which is also the most important one, which is that with the help of weekly profiles, we will be able to understand the open high low close and the open low high close factor of the weekly candle, right? Which will helps us understand the weekly range or the weekly candles range a lot better. And we'll start to look at the weekly candle range with a more refined and logical perspective, right? Now the open high low close concept or the open low high close is a different important concept in itself, right? And I'll be making a separate chapter on it in CPI and level 3, and we'll discuss it in great detail. But for now, you just have to remember that with the help of weekly profiles, we'd be able to understand the weekly candles range better, right? Now, weekly profiles will help us break down the weekly candle into multiple segments, and each segment, as I said before, will have its own fractals and characteristics. Now, weekly profiles is one of the main concepts that plays a role in helping us determine daily buys or drawn liquidity. Now, determining daily buys is again in itself requires a whole chapter, and I'll be making one on it at the right time. But you can see that as we go along these chapters in CPI, not only I'm explaining these new concepts to you, but also I'm introducing new potential concepts to you that we will be discussing in the future, like determining daily buys or the open high low close concept, right? We'll be discussing all of them in later chapters of CPI. Now, another thing that weekly profiles will help us with is determining higher time frame narrative. It will help us understand where price is in the grand scheme of things, where prices came from, and most importantly, where it could potentially go to. This is what we call narrative. This is what we call building narrative, right? There's a lot more intricacies to it which we'll learn in the future. But what you need to know is that weekly profiles will helps us with building a higher time frame narrative, and then we're going to refine and bring that narrative down to the lower time frame, and finally put and find potential trading entries. And also along with that, with the help of narrative, we will gain conviction and confidence in our analysis and our trade ideas. Now, weekly profiles will also help us with our drawn liquidity and targets, right? And this will be possible when we combine it correctly with key level and period area metrics. Now, last but not least, weekly profiles will help us with understanding the time aspects of charts better, right? This is one of the starting concepts that will introduce us to the time factor of charts, right? We'll discuss time in great detail in level 3, right? Level 3 will be mostly about the time factor of charts. Now let's discuss the different concepts we're going to be using in conjunction with weekly profiles to create a proper and logical framework. So down we've got this list, right? The first and most important thing surrounding weekly profiles, and the thing that actually backs weekly profiles and makes it meaningful, are key levels. The second we've got is market profiles. Now obviously, as I said before, weekly profiles inherently in itself is an advanced form of market profiles, which means it's made off of it. But even then, you're gonna find multiple different market profiles inside the higher time frame weekly profile, right? We're going to be using the PDRA metrics to help us with refining the key levels that we're going to be matching with price to define a weekly profile, right? We'll have a lot of key levels both in discount and premium, and we're going to refine them with the help of PDRA metrics and dealing ranges. And then we're going to match those key levels with price to define and frame specific profiles based on the day of the week. Now moving on, here are some important points regarding weekly profiles, right? First of all, we are going to use the Monday's price action and specifically the Monday's candle to base most of these weekly profiles, meaning the Monday's candle in particular will have a huge part in determining and framing the weekly profile throughout the week. Before the weekly candle opens, you cannot for sure expect or anticipate any weekly profiles, right? It's not possible. You will only be able to do that once you measure the price action on Monday, and then you gauge that information, and then you're going to decide and reach a conclusion based on what Monday's candle has done, whether it has tested a key level or not, whether it formed a CRT or not, and so on, right? And then based off of that, you're going to decide which weekly profile you're going to frame. This is how you're going to base and frame a specific weekly profile throughout the week. Another thing is that these weekly profiles are dynamic, right? And adjustable, meaning the type of weekly profiles can indefinitely change based on how price action forms throughout the week, which implies that there is no certainty in weekly profiles. There's like no black and white surrounding weekly profiles, and it may change throughout the week depending upon how price action forms. So keep that thing particularly in your mind and never treat weekly profiles rigidly, right? Another thing is that weekly profiles are subjected to change in adjustments, as I just said now, and these changes are going to be made throughout the week based on how price reacts to certain key levels and based on how price action forms. The last thing that you can use for weekly profile is the news calendar, and it can assist you with framing the right weekly profiles, right? We're going to learn about this later. So here we got some important weekly profiles. Now remember, these aren't the only weekly profiles, but instead we've got other ones too. But these in particulars are the one that I use the most to frame a narrative or a weekly profile throughout the week. And these are the particular ones that usually plays out most of the time, right? And if you just stick to these ones, which I do, they're going to be more than enough for you to be consistently accurate with your analysis, right? So let's discuss each one of them in detail and let's discuss their different intricacies. Now, first one we've got is a classic expansion weekly profile. Now, what happens in this sort of weekly profile is that we start off Monday with a range, and Monday's candle is particularly smaller in her size comparatively, and basically it forms a ranging candle. Then what happens on Tuesday is that price takes out Monday's candle, and along with that, it tests a higher time frame daily or weekly key level. During Tuesday, price tests a discount key level and then it closes higher. And then the rest of the week, price continues higher until the drawn liquidity is reached. And in this case, the drawn liquidity is particularly reached on Thursday. Sometimes it can also happen during Friday. Now, depending upon when the drawn liquidity is reached, if it's reached on Thursday and during Thursday's price action, then the Friday's candle is likely going to be a retracement. If it's reached on Friday, then maybe during Friday's London Open or New York Open, then Friday is going to be a reversal, which will look like a higher time frame retracement, right? Now you can see right here, depending upon the day of the week, we are dividing the whole weekly candles range into multiple segments, and then each segment has specific fractals depending upon how price reacts to key levels on the higher time frame, right? Now with this weekly profile, price forms the high or the low of the week, particularly on Tuesday, right? More often than not, you're gonna see that the low or the high of the week is formed on Tuesday. Now, for bearish scenarios of this weekly profile, it's the exact opposite of this example shown. In bearish classic expansion weekly profile, the high of the week is formed on Tuesday, and then the low of the week is formed on Thursday or Friday. Now, what you can also see here is that the open, low, high, close of the weekly candle is also defined in here, and you can see how the body and the wick of the candle are formed and how you could have exploited each part of it, right? Moving on, here you can see the whole weekly candle broken down to various lower time frame market profiles. So you can see Monday starts off with a ranging profile, Tuesday has a manipulation profile with which it also tests a higher time frame key level, and then Wednesday and Thursday has an expansion profile towards the drawn liquidity or towards the opposing higher time frame key level, which is our target. And then when the key level is tested, it leads to a retracement on Friday. Now, for some of you that learned about market profiles, you might be wondering about how you can classify these market profiles, right? And here's the answer to it. Now, remember, this isn't the only way of looking at market profiles, right? There's other ways too, which also works. But the most refined way of classifying market profiles and dividing them is by using time. And in this case, we're going to use the time of the week, which is the day of the week, and we're going to classify each day into a different market profile, right? This is the most refined way of how you can classify market profiles. More often than not, Monday's candle is likely going to be a ranging profile, and then Tuesday happens to be a manipulation profile, and then Thursday and Friday and then Wednesday and Thursday leads to an expansion profile, and then Friday is usually a retracement profile, right? Now let's see how it would look on the daily time frame. So obviously right here you can see that these two lines represent higher time frame key levels, right? So what happens in this sort of weekly profile is that Monday's candle happens to be a ranging profile or a ranging candle which doesn't test any sort of key level, and then Tuesday takes out the Monday candles and test a higher time frame key level, right? And then Wednesday and Thursday candles expand higher, and then you can see that the Thursday candle reaches the higher time frame key level, which leads to the Friday candle being a ranging candle in a retracement lower. Moving on, here is the second type of weekly profile of the one that we discussed before, the classic expansion weekly profile. Now this one is also a classic expansion weekly profile, but in this case what happens there is that instead of the Tuesday being the high or low of the week, Monday tests a higher time key level, and Monday starts the week with testing the key level straight away. Now as I said before, you cannot anticipate a weekly profile right away. You're gonna have to first wait for the Monday's candle to form, and only then you can decide what type of weekly profiles can we have. Now you cannot know if Monday is gonna test a key level or Tuesday before the price action forms, but what you can do is wait for the price action to form and then analyze the price action and anticipate a certain scenario or a certain profile and frame a weekly profile based on how price is formed on Monday and based on what price is telling you. So in this case, Monday test a higher time frame key level, and the rest of the week we start our journey higher towards the opposing key level and the drawn liquidity, right? And we meet and reach the weekly objective. And once that objective is reached, the Friday's candle is a retracement. So in this case, you can see that during Wednesday we have a retracement before we expand higher again, because we know that price never moves in a straight line and always moves in market profiles, right? So right here the weekly candle is again divided into lower time frame market profiles, and you can see that Monday starts off with testing the higher time frame key level straight away, and then Tuesday and the rest of the week we start moving higher and expansion profiles along with retracements in between the expansion profile to rebalance the expansions. Now right here you can see that as soon as we hit the weekly objective either on Thursday and Friday, we then retrace lower. Now in this case, if the weekly objective or the opposing key level is reached on Wednesday, then we would form the high of the week on Wednesday, and Thursday and Friday price action is going to be a retracement, right? You're going to wait and see what price when this price reaches the higher time frame key level, and then you're going to decide your weekly profile and build a narrative based on that, right? You're going to build a narrative based on a logical framework. Here is how it would look on the daily chart. Monday starts off with testing higher time frame key level, and then it expands higher. Moving on, here we got another interesting type of weekly profile. This is a bit more advanced, and as I said before, you cannot anticipate it right away, but instead you're gonna have to wait and see how the price action forms on Monday and Tuesday, and then you're gonna frame this weekly profile, right? Here's what happens in this sort of weekly profile. Price starts out with a small expansion on Monday, but the nature of this expansion is weak because it originates without testing a higher time frame key level. And due to this nature, the expansion on the Monday's candle form a CRT, right? In most cases, it forms a CRT, and then the Tuesday candles happens to be a ranging candle or an inside bar in most cases, right? And the Tuesday candle happens to be a ranging candle. Then what happens on Wednesday is that price takes out the Monday CRT and tests a higher time frame key level, and then it reverses and expands from there, and then it starts its journey higher to take out the opposing end of the range and eventually reach a higher time frame opposing key level, right, inside the dealing range or the PDRM matrix. So in summary, Monday's candle form a CRT, Tuesday candle happens to be a ranging candle inside that CRT, meaning an inside bar candle, and then Wednesday candle purge the CRT range and expand higher on Wednesday and Thursday to meet the weekly objective, right? So what you can see right here, that every single month or every single week and every single daily candle has a particular objective that it needs to meet, right? Every candle starts out with first of all testing a key level, and then it ends and closes after it reaches an opposing key level which finishes its objective, and the objective is being met, right? In this case, the key level is tested on Wednesday, and then the objective or the weekly objective is met by reaching a higher time frame key level either on Thursday or Friday. Here is how it would look based on lower time frame market profiles. So you can see that Monday starts off with an expansion profile out of nowhere, meaning the expansion profile is weak and it originates without testing a higher time frame key level. And then Tuesday candle is a ranging candle and an inside bar. And then on Wednesday, the Wednesday's price action manipulate below the Monday CRT and test a higher time frame key level, and then it expands higher. And that's where we start our expansion higher and start our journey towards the non liquidity, right? And this is exactly how you can catch weekly expansion. You first wait for price to test a higher time frame key level on one side, and once there is a lower time frame confirmation after the higher time frame key level has been tested, right? And the lower time frame confirmation has been made in the form of CSD or a structure shift, then you can position yourself towards the drawn liquidity and exploit the weekly range. And in this case, you wouldn't trade the Tuesday candles because there's no purge inside of it, and you would wait for Wednesday. And then on Wednesday, when the CRT purge happens, then you're gonna wait for a 4 hour CRT and position yourself towards the drawn liquidity on the higher time frame and trade that, right? Here is how it would look on the daily time frame. You can see that the Monday's candle is a CRT, Tuesday is an inside bar, and Wednesday candle purge the CRT and then expands higher again. And again, the drawn liquidity is reached either on Thursday or Friday. Moving on, here's another type of weekly profile. This is also an advanced one, and again, based on what I've said before, you can only anticipate it based on how price action forms throughout the week. As I said in the start of the chapter, these profiles are dynamic and adjustable, so you're going to adjust them based on how price action on the previous days of the week. So what happens in this profile is that again we start off with an expansion on Monday, and that expansion originates without testing higher time frame key level, which leads to it being a weak and indecisive expansion, right? Then that Monday candles also happens to be a CRT. Then what happens on Tuesday is that price forms an inside bar, right? And doesn't do anything significant. And then on Wednesday, price takes out a Monday CRT high and expand lower. And then during Thursday's price action, price test a higher time frame key level and then it expands from there. Now there are multiple variants of even this single weekly profile, and you could use them all, and you're gonna build the confidence around it based on gathering data and backtesting it as much as you can. Now one scenario can be that the Wednesday candle also forms a range inside the Monday CRT without taking out the Monday's high, and then on Thursday we purge the Monday's low first and then expand from there again. So you can see in this other scenario, even the Wednesday formed an inside bar and price consolidated from Monday till Wednesday and didn't do anything significant at all. And then on Thursday, maybe we had a high impact news which led to price taking out the CRT and led to the CRT being purged, and after that we expanded higher. You can see that we can even add news events to it and potentially frame a narrative based on that. Another scenario could be that the Monday's candle don't form a CRT but just forms a ranging candle, and it just consolidates, and then price continues that consolidation till Wednesday's close, and then on Thursday we manipulate that below that consolidation or that range and then expand higher towards the drawn liquidity. So you can see that even though there are multiple different scenarios of this single weekly profile, right, the narrative is still the same, and you can frame the same weekly profile based on these different price action, right? All that matter is the narrative and whether it's logical or not. And here you can see that it's pretty logical and objective. Another scenario could be that there's no high impact news event till Wednesday, and maybe there is bank holidays, which is why price consolidated and didn't do anything significant till Wednesday. And then on Thursday, maybe there is CPI or PPI or any other high impact news event which led to the expansion. Here is how it would look based on market profiles. On Monday, price form an expansion. Tuesday is basically a range, and then on Wednesday, price takes out the Monday CRT high and expand lower, and then on Thursday we test a higher time frame key level and reverse from there. And this is how it would look on the daily time frame. You can clearly see that we have this CRT, and then we purge that CRT on Wednesday, and then we purge the other opposing end of the range of that CRT on Thursday, and then we expand it higher. You can also imagine how the different scenario for this weekly profile would look based on what I told you just a moment ago. Now let's discuss some example here based on how you can frame these weekly profiles on charts, considering key levels and the price action on Monday and throughout the week. As I said before, these profiles are adjustable, and you're gonna see that in a minute and see how. So we've got this first example here. Right here you can see that it's a negative chart and we don't know what's going on. So right, so what we're going to do is mark out the different key levels and also mark out the weekly candles price action and the different days of the week, and see how price reacted to those key levels and what are the different weekly profiles we can frame based on this price action we've got right here. So after plotting out the key levels on this chart and the day of the week, we can see that we've taken out this range high and we are testing a higher time frame key level on Wednesday. Now what you can also see right here is that we actually tested this range high on Monday and it offered us a reaction, but then what happened is that price came above again and took the Monday's high and this range high again on Wednesday. Now if you ask me why this happened, then the answer would be that I don't know. But what I do know is how to frame a narrative and trade idea. And what I also know is how to manage risk. And one another thing I also know is that I know that no trading system or concept will allow me to have a 100% win rate or even a 90% win rate. And I'm always going to have time like these where price goes against my analysis and I lose trades. But at the same time, I also know that my risk management and my psychological aspects are strong, so I wouldn't let these losing times and these losing scenarios mess up with my head or mess up with my performance, and I would just treat these scenarios or these losses as an inevitable part of the game. I know that if I do my analysis out of 10 times, I'm only going to be right about 7 times, and the other 3 times I'm going to be wrong, which is completely fine because the goal is to not reach perfection but just to gain enough and adequate amount of knowledge with which you can be consistently profitable for the long term. If you have a win rate and strike rate of 70%, then you are ahead of 90% of the traders out there. And if you consistently stick to your plan and follow your system, you are then ahead of everyone. But if you're going to be an amateur and always cry about how price went against your analysis and how you lost this trade, then you'll never succeed. When I lose, I feel nothing and I embrace those losses because I know that they are inevitable and I treat them as a business cost. You know, when you're doing a business and you're running a business or you're starting a business, you always need an initial capital or or a business cost that you must spend in order to run that business. And at first, you're going to be at loss. You're going to be at loss. But as you stick to your business plan and you run it diligently, and as time goes on, you're going to become profitable. But that doesn't mean that you're going to stop losing. No, that's not how it works. Even when your business starts to become profitable and it starts earning you money in the long term, you're still going to incur cost, or what we call in business term expenses, in the short term. You're still going to incur these expenses, and they're going to come in the form of labor cost, payroll, material cost, operating cost, and so on, right? And the profits that come by that at the end of the year will make sure to compensate for those expenses. And when you subtract your expenses from your whole revenue, at the end of the year you're always going to end up in profits. But if you are being an amateur and you always let those costs mess up with your head and mess up with your performance, then you wouldn't be able to run that business properly, right? Therefore, a good businessman know that in order to run his business, there are going to be costs, and you have to embrace those costs in the short term because you must know that in the long run you're going to end up with profits. because your business will earn revenue far more than the expenses, and the difference between them will result in profits for the company or the business, right? In the same manner, it's your job as a trader to treat trading like a business and think in terms of costs and revenue instead of profit and loss, because when you treat losses as an operating cost or expenses, your emotional attachment to them will be lower and they won't make you panic or you won't cry about it anymore, right? So treat trading like a business and don't let losses and wrong analysis mess up with your performance, and instead journal them, embrace them, and most importantly accept them, right? Okay, so with all of that being respectfully said, let's look at the charts again. So as I said, price on Wednesday tested that higher time frame key level in the form of this range high, and Monday and Tuesday price action were basically a consolidation or a range, and they didn't do anything significant. And our drawn liquidity is lower. So based on this, you can see that we can frame a weekly profile here, which is the midweek reversal profile, because Wednesday tested a higher time frame key level, Monday and Tuesday price action is ranging, and the opposing drawn liquidity is lower. So we're gonna expect Thursday and Friday to be an expansion lower. Let's see what happens here. So you can see right here that Thursday and Friday expanded lower towards return liquidity. You can see that it didn't reach there, but it did expand it lower, which means you successfully framed a weekly profile and a narrative here, and you could have traded this on the lower time frame, right? That also means you could have had 2 days of price action where you could have positioned yourself and CRT on the lower time frame, and you would have had your drawn liquidity and your bias analysis correct. Let's move on to another example. Right here you can see that this is again the same chart here, and let's see how we can again frame a narrative based on this price action. Right here again, after drawing out the key level, you can see that this candle right here is the Monday's candle, and to the left to it we can see that after last week price action we formed this order block. Now the reason this is a valid order block is because it purged liquidity and price closed below it, so this will be a valid key level for us. Now the opposing key level or drawn liquidity is this order block right here, right? So right here you can see that on Monday we started out with this candle and we straight away tested a higher time frame daily key level in the form of this order block. So now Monday has tested a key level and the drawn liquidity is lower, which is this order block. So you tell me what sort of weekly profile can we expect here, right? Of course, it's going to be a classic expansion profile lower towards the drawn liquidity, right? And right here you can see that on Tuesday and Wednesday we expanded lower to test the opposing drawn liquidity, and the weekly objective has now been met, which was this order block of this opposing key level. What you can also see right here is that we are predicting and analyzing this price action on the daily time frame, candle by candle and turn by turn. We are literally analyzing the candle one by one and predicting and determining where it's gonna go, which is what we call determining daily buys. Now we're going to discuss this in later chapters of CPI, but this concept right here, weekly profile, is one of the main one with which we're going to be doing this, with which we're going to be determining daily buy. So we are introducing it, right? Right here, you would have again had 2 days of price action in your favor, and you would have correctly determined your drawn liquidity, and you would have been right about price and your daily buys. Now here we got another example again on the same chart, and we're gonna see how we can frame another weekly profile and narrative here. So if we mark out the key levels and the day of the week on the charts, then you already know what happened on the first 3 days of this week, which is that we had a classic expansion lower because Monday tested the daily order block and then Wednesday reached the drawn liquidity. Now right here again we've got to measure what can happen on Thursday and Friday. And what we can see is that Wednesday tested a key level in the form of this order block right here, and we've also formed this new FEG right here, which could be our potential drawn liquidity. This potential drawn liquidity or opposing key level is also the Wednesday's candle high, which aligns with this FEG. So on Thursday and Friday, we're going to expect price to go higher and reach that drawn liquidity in the form of the FEG. So let's see what happens. And right here you can see that we did exactly that, and Thursday and Friday were up close candles and we reached the drawn liquidity. Now right here on Thursday, you can see that the Thursday candle tested a non-liquidity of the opposing key level, which met the weekly objective. That's why you can see that the Friday candle was an inside bar and didn't do anything significant. It was basically a ranging candle. Moving on, here we got another example. So we've got this naked chart and let's plot on the key levels in the day of the week and see what we can frame here and what weekly profile can potentially play out. So right here you can see that this candle right here is the Monday's candle, and what happened on Monday is that we took out this CRT low and we also tested this order block. Now this is a homework for you to tell me how is this candle a valid order block and which criteria led to making this order block a valid one. This is a homework for you and you gotta send me the notes, okay? So moving on, we've tested a key level on Monday right here already, and the drawn liquidity is higher, which is this range here right here. So we're gonna expect a classic expansion weekly profile higher, and let's see what happens. And right here you can see that that's exactly what happened here. On Tuesday and Wednesday we expanded higher and reached the drawn liquidity. So here we got another example here. Let's put on the key levels and see what we got here. Right here you can see that on Monday we've taken out this CRT high, which is in itself a key level, and you can treat it as a higher time frame key level, right? And also to the left you can see that we've also taken out this range high last week, and we've also had this down close candle which potentially shifted the momentum to the opposite side. And along with that, we've taken out this CRT on Monday in the drawn liquidity or the opposing key level as this range low right here. So based on that, we're going to expect and anticipate a classic expansion weekly profile, because on Monday we've already tested a key level and the opposing drawn liquidity is lower, right? So we can have a classic expansion weekly profile lower. And right here you can see that that's exactly what happened here, and we expanded lower the rest of the week towards the range low or towards the drawn liquidity. Now right here you can see that this is exactly how you frame a narrative and a weekly profile on the higher time frame. Remember this, that you would never use this alone, but instead you're going to use it in conjunction with all the other concepts, and you're going to combine time with it, right? And only then it will work. This is basically an introductory concept to the stuff that we're going to be dealing with in CPI in the future, right? This is basically a stepping stone, and we still have yet to deal with a bunch of other things in CPI that we are going to learn. Now we move on to chapter 8 of CPI. In chapter 8 we will discuss intraday profiles and how intraday profiles will assist us in our trading. So first of all, let's define and introduce what intraday profiles are. So the definition of intraday profile is as following. So they are basically an advanced form of market profiles with whose help we can break down the daily candle into manageable segments, right? And each segment is going to have its own specific fractals and characteristic, right? Now you can see that the definition might be similar to the ones that is of the weekly profiles, and that is because the core concept of both these concepts is the same. The only difference is that with weekly profiles we dissect the weekly candle into segments, whereas with the help of intraday profiles we dissect and divide the daily candle range into multiple segments, right? And then each of these segments are going to have their own fractals and their own nature. And obviously again intraday profile will only work when they are incorporated or integrated correctly with profiles such as with concepts such as PD arrays, key levels and dealing ranges, and so on. Moving on, intraday profiles will help us with the following, right? We've already discussed it for weekly profiles, and for intraday profiles the only difference is that we'll do it for the weekly candle instead of now we'll do it for the daily candle, sorry, instead of the weekly candle. So intraday profiles will help us with understanding the open high low close or the open low high close of the daily candle. We're going to use it to break down the daily candle, right? We're going to use it to help us determine intraday narrative and intraday session buys. And last but not least, it will help us understand the time aspect of the intraday charts better. Moving on, here we got the different important intraday profiles that we'll discussing, right? That we'll be discussing. So these are the most significant one, okay? So let's discuss each one of them one by one. Now, before we move on, you need to remember that the first two intraday profiles here that we've got basically deals with the first half of the day or the daily candle, meaning the first two profiles deal with the Asian range in the London Open and the London Lunch, whereas the rest of the two profiles deal with the second half of the day, meaning from New York Open to London close and the rest of the day until the daily candle closes, right? Okay, so let's discuss the details of each one of these intraday profiles. So first of all, right here, you need to first of all know the framework that we are dealing with, okay? So this section right here represents the Asian range or flout. And this segment of time represents the London Open, which is from 2 a.m. to 5 a.m. Eastern time. And then this empty segment represents the London lunch kill zone, which is from 5 a.m. to 7 a.m. Eastern time. And after that, we've got this segment which represents the New York Open, which is from 7 a.m. Eastern time to 10 a.m. Eastern time. And then once New York Open ends, the London close starts. The London close kill zone starts, which is from 10 a.m. to 12 a.m. Eastern time. So this is basically the daily candle divided into multiple segments, right? Which also we call kill zones, and each one of these segments are gonna have their own characteristics, and price is gonna have different nature when it's inside of these different kill zones. So in this sort of profile, the first one that we got, what happens is that the Asian range, which is this segment right here, it starts out with a ranging profile, right? And it also potentially forms a CRT. Now the Asian range of flout or that time of the day is the first 2 4 hour candles of the day. And more often than not, price forms a CRT with these two candles on the 4 hour. And then what happens during the London Open from 2 a.m. to 5 a.m. is that price purges that CRT low, and it takes out that CRT and that Asian range and tests the higher time frame key level, and after that it expands higher from there to the upside until the opposing key level or drawn liquidity is reached. In this case right here, you can see that the New York Open is a continuation profile because it continued the price action until the drawn liquidity was reached. We will also discuss this profile further in the chapter. Now let's look at how it would look based on lower time frame market profiles, specifically on the 15-minute or the 5-minute. So you can see right here that the Asian session or the Asian range starts out with a ranging profile, right? It ranges at that time of the day. And then London Open, which is from 2 to 5 a.m. What happens is that during London, the price action manipulates below that range and tests a key level, right? And then it expands higher. New York Open then continues that expansion higher until the drawn liquidity is reached till London close. Here is how it would look on the 4 hour. The first 2 4 hour candles of the day, which is basically the flout or the Asian session, you can see that it forms a CRT, and that CRT is then purged during London Open, and price manipulates below to test a key level, and then it expands higher. Moving on, here we got the second intraday profile, which is the delayed protraction profile. And this profile, what happens is that the day starts with the Asian range or the Asian session expanding straight away and testing higher time frame key level. Now in this case is the higher time frame key level in this case has already been tested during the Asian session. What happens during the London Open is that the price action expands straight away without having any manipulation profile like it did in the normal protraction profile. This is how it would look based on lower time frame market profiles. You can see that the daily candle starts with an expansion towards the higher time frame key level straight away instead of forming a range, and then London Open expands higher straight away without any manipulation profile in between because the higher time frame key level has already been tested. This is what we call a delayed intraday protraction profile. This is how it would look on the 4 hour. Now moving on, here we got the second half of the profiles, which as I said before, these two profiles that we're going to be discussing now will deal with the second half of the day, meaning from New York Open till the daily candles closes. The first two profiles that we discussed dealt with the first half of the day, whereas the rest of these profiles will deal with the with how price forms throughout the second half of the day during New York Open and London close, right? So we can see that the London has already expanded higher, and now we have to determine what happens during New York Open and London close right around from here. So the way how we're going to determine that is by looking and seeing whether the London Open Ken zone has reached the drawn liquidity or the opposing key level or not. If the answer is yes, then New York is most likely going to be a reversal. But in this case, you can see that it hasn't reached the drawn liquidity, so the answer is no, right? So the New York Open is most likely going to be an expansion higher towards the key level. Right here you can see that during New Year Open what happens is that the New Year price action we have a turtle soup, and then we continue the expansion higher, and we expand higher again towards the drawn liquidity. The next New York intraday profile we got is the New York reversal profile. Now in this one you can see that the London Open has reached the key level, which means the daily candle has now reached its objective, and now we're gonna have either a retracement or reversal. In most cases we have a reversal profile in New York if the key level is significant. Here you can see that the London Open almost reached the higher time frame key level, and then as soon as the New York Open segment of the day starts, it tests the higher time frame key level and then reverse from there immediately. So moving on, here we got another type of New York reversal profile. In this case, what happens is that during the whole first half of the day, price doesn't do anything significant, and it just ranges the whole day and forms a range. And then during New York, price manipulates below that range or that consolidation to a key level and test that key level, and then it expands from there. And this is how it would look based on lower time frame market profiles. Price ranges the whole first half of the day without any significant move, and then during New York it has a manipulation profile, and then after testing that key level it expands higher, which look like a reversal on the higher time frame. Now let's discuss some examples before we end this chapter. So right here you can see that this price action on the 4 hour, right? Now these two lines represent the opening and closing times for the day, right? What you can see right here is that during the Asian range, we form a range without testing a higher time frame key level. So based on that, the most likely scenario for price is to manipulate lower to test the key level during the London Open and then expand from there, right? So we're gonna wait for price to see how it reacts and which intraday profile and narrative we can frame here. So right here you can see that during London Open, which is these 3 hours right here, price manipulates lower and test the higher time frame key level, which means we can now have a normal protection profile here. Now based on this, we can expect London Open to now expand higher. And you can see we have an intraday normal protection profile here and price expanded above. Now let's analyze this again and see whether we've reached the opposing end of the range or the drawn liquidity during London Open or not. And the answer to that is no. We can clearly see that price didn't reach the higher time frame objective or the opposing end of the range. So now based on that, we have to expect or anticipate which sort of intraday profile can we expect during New York Open. And you can see right here that the answer to that is a New York Open continuation profile, because we haven't reached the objective. And right here you can see that during New York Open we reached the higher time frame drawn liquidity and these equal highs right here, and the daily objective has now been met. Moving on, here we got another example here. You can see that again during Asian session we formed a range and we did not do anything significant, right? And right here you can see that we still have yet to test a higher time frame key level. So based on this, we can expect a normal protraction intraday profile during London Open. Let's see what happens. And right here again you can see that during London Open we manipulated lower, tested that higher time frame key level, and we had a normal protraction profile, and then we expanded above. Now again right here you have to determine what happens next during New York Open, and you're gonna decide that based on seeing whether the drawn liquidity is reached or not. And right here you can see that it's not reached because we still have yet to take out that range high. Hence that's why New Year Opens turns out to be a New Year continuation intraday profile. Right here you can see that we retraced the key level again before moving higher, but you can see that the low formed during London Open was protected and we never took out that low. Moving on, here we got another example. Right here you can see that the Asian session has already tested a higher time frame key level. So based on this, we can expect a delayed protraction profile and we can expect London Open to expand straight away without any manipulation profile, because we've already tested a higher time frame key level during Asian session, right? And right here you can see that that's exactly what happened during London Open. Now also right here you can see that during London Open we've also tested another higher time frame key level or the opposing drawn liquidity, and that has been now reached. So now we have to determine what happens during New York Open. So right here you can see that the drawn liquidity has already been reached. So New York turned out to be a New York reversal intraday profile.